What's going on, guys? It's Stas here. Welcome back to another video. As you guys read in this title of today's video, I'm going to be talking quickly about Facebook and what happened with this particular company, why it took a 20% dip, as well as going over what my plans are in terms of trading this particular stock. And for those of you guys that are new to my channel, my name is Stas, and I make videos dealing with swing trading, day trading, long-term investing, and my personal philosophies and strategies when it comes down to investing and trading in the stock market. So if you guys are interested in learning more about the stock market, feel free to drop a like, leave a comment, subscribe, and let's get started with the topic of this video. So right off the bat, let's look at this chart before we hop into an article on my internet browser talking a little bit about more what happened to Facebook. So we do see here that Facebook took an insane dip of about 20%, pretty much wiping out its entire 2018 stock price rise. So we see here it started off at 2018 at about $185. It took that big dip to about $150. It started the uptrend up to about $220. Then we saw the big 20% drop yesterday after the earnings report back to about $175, which is lower at where it's, which is about like 5 to 6% lower from where it started the year at. So this is a big drop in Facebook, and I wanted to just quickly talk about why this stock dropped. So in this article by MarketWatch, we see that Facebook stock drops 19%, loses $120 billion in its value after a warning that revenue growth will take a hit. So looking deeper into this article, we see, okay, $120 billion market cap lost. That's absolutely absurd, right? We see the stock, if it does close below 176, it means that the shares have wiped out their 2018 gains. So that's another huge thing to be looking at. The social media behemoth stock lost roughly 1/5 of its value, guys. 1/5 of its value in one day. So that just goes to show how quickly things can change in the stock market. And I was talking about this in yesterday's video. Earnings reports can shake up a stock in a matter of one day, and we saw it here with Facebook. So the stock dropped about 7% immediately after the earnings report was released, then plummeted to a loss of more than 20% after a conference call with analysts progressed. So close to 34 million shares exchanged hands in Wednesday, when usually the volume's around 17 million. So the guidance is a nightmare guidance, GBH Insights head of technology research Daniel Ives said. If you look at their forecast for the second half of the year in terms of user growth and the expense profile, it refuels the fundamental worries about Facebook post-Cambridge Analytica. So pretty much, guys, why Facebook dropped is due to the miss in revenues. Although the revenues were a 41% increase from a year ago, we see that the sales of about $13 billion, which was a 42% increase from a year ago. But still, the sales, they missed the target that the analysts had for the sales of Facebook, right? And with Instagram, guys, I've read a little bit about Instagram. Obviously, Instagram is owned by Facebook. Instagram's daily active users are about 1 billion right now, and this growth is going to slow up, right? And this is going to be affecting Facebook stock. Looking over to the next couple of years, there's absolutely no way Instagram's user growth as well as Facebook's user growth is going to be growing at this rapid pace that has been growing at the past couple of years. It's just not possible. Most of the growth, in my personal opinion, with Facebook and Instagram is behind us, right? With 1 billion, just think about it, 1 billion daily active users are on Instagram. So the profits were not what rattled investors, though. Facebook recorded sales. Okay, we talked about that. User growth was flat in the US and Canada and declined in Europe from the previous quarter. So the user growth in terms of how many people are using Facebook, it has not grown in the past quarter in this country, in Canada, and Europe. So it actually even fell in Europe. So that's something to keep an eye on very closely in terms of Facebook stock. But the stock didn't fall off a cliff until the chief financial officer, David Wehner, disclosed that the social media giant expects the revenue growth slowdown to continue. And this is obvious. Like I said before, most of the growth in Facebook and Instagram is behind us, right? Our total revenue growth rates will continue to decelerate in the second half of 2018, and we expect our revenue growth sales to decline by high single-digit percentages from prior quarters sequentially in both quarter 3 and quarter 4, he said on the conference call. And this is when, the Facebook stock went from 7% decline all the way down 13% more to a 20% decline. Winner also said that Facebook still expects expenses to grow 50% to 60% from last year. In the past, Facebook, Mark Zuckerberg has said the company planned to hire 20,000 people to handle safety and security on its platform. So that's obviously a big thing with Facebook: security of the user, security of the people creating profiles. They want all their information secured, and this is obviously something that was covered with Mark Zuckerberg a couple weeks back at that conference. As I've said on past calls, we're inviting so much insecurity that it will significantly impact our profitability. So looking more deeper into the Facebook's numbers in Europe, we see they declined in part due to the European Union's General Data Protection Regulation, which went into effect during the quarter. Some analysts had speculated that GDPR might actually benefit giants such as Facebook and Alphabet, which is Google, because they would be able to implement the new requirements unlike smaller companies. And that's obviously not what happened. It dropped, the daily users in Europe dropped from 3 million daily users and 1 million monthly users, since the first quarter. So this is absolutely crazy, guys. The slowing of the growth in Facebook and Instagram is finally starting to catch up with the stock. And the market obviously, negatively reacted to this news, to these earnings reports, which sent the stock plummeting. And obviously, Facebook is still a tech giant. It's still the biggest social media platform out there. So this could be considered a dip buy if Facebook slowly starts to turn things around. And although, the future outlook for Facebook is starting to slow down, this company is still a profit giant, guys. They make an insane amount of money per year. They're growing their sales at 40%. 40% sales growth from last year. That's still absolutely amazing. That's still on pace with what a growth company is producing in terms of sales, right? They're still unprecedented scale. The best ad tech in the industry, says PMX agency Facebook lead Jesse Math. In the short term, Facebook is still viable. Really, this quarter and this year, it's focused on a long-term strategy. Everything they do is focused on making Facebook a place where users want to be. All the changes it's making to the platform, the algorithms, the tools advertisers use are there for the long term. So now pretty much to look back to Facebook stock and analyze it a little bit in terms of what I'm going to be doing with trading this particular stock. So I sold some shares today in some other companies to clear up some cash because I am thinking about taking a position in Facebook stock, and I'm going to be telling you guys a little bit about that right now. So if we look over to the 3-year weekly chart, what we notice in Facebook stock over the past 3 years is that whenever it took a significant dip in its price, it always, acted as a buying opportunity, right? It took a dip here from about 130 down to about 110, and that was a good buying opportunity as it soared up from there, right? And from here, it had a huge bull run up to about 195. Then we saw that big pullback earlier this year, about a couple of months back, all the way down to the 140s, and that was another buying opportunity for Facebook stock. And now we saw from here, it popped up all the way. It had a huge bull run all the way back to 220. And now it pulled back like we saw yesterday all the way down to 175. And if we look at the 1-day, 1-minute chart, it's pretty much been stagnant. The price has been stagnant at 175 all day today. So that's a good sign in terms of a consolidation point, but obviously Facebook still has room to drop if investors are still worried about the stock. If more investors continue to sell off the stock is going to continue to go down in price. So in my opinion, Mark Zuckerberg is one of the best CEOs out there. Facebook is still a huge social media giant, a huge profit-generating machine, so I don't really see this as too much of a long-term issue for Facebook, although their daily active users are slowly starting to slow down. Instagram is slowly starting to slow down in terms of new users joining the platform. I think, personally, this is a small hiccup in this company, right? And this is more of a dip buy opportunity for Facebook. So I'm going to be watching Facebook very closely with plans on taking a position on Monday, most likely. I'm going to be watching it very closely to finish off today and into the market tomorrow on Friday to see, how the market reacts to Facebook. If things slowly start to recover, if it slowly starts to push up into the 180s, that's going to be a very good sign that Facebook is slowly starting to recover in terms of its stock price. But again, this one could continue to go down in price for all we know. Obviously, it's slowly been consolidating at 175, like I said, but that really does not mean anything. It's only been one day since the earnings report, so obviously there's still negative tensions in the air with Facebook, so we still have to give it some time. So I'm just going to be giving it some time into next week, most likely, before I end up taking a position, right? So that's pretty much what I'm doing with Facebook stock. Obviously, a big company like Facebook, and like I've been mentioning on my channel in the past, I like buying companies that are in uptrending patterns over time that are at dip buy opportunities. So this is a very good dip buy opportunity in Facebook, and the company is still a very strong profit generating machine in the long term, in my personal opinion. So that's how I'm just going to be viewing it. And I'm going to be pretty patient with this one, waiting until next week to see what types of moves the stock is going to make. So I hope you guys enjoyed this video. If you did, feel free to drop a like, leave a comment, and subscribe. Let me know what you guys are doing with Facebook stock. Are you planning on taking a position in this stock? Let me know down below in the comments. And if you guys want to follow me on Twitter and Instagram, the links are down below in my description. I post every single day there, updates to my channels, profits I'm making in the stock market, trades I'm looking to make in the stock market, and just random stuff about what's going on in the market. So again, make sure to do your own research before you take any positions in the stock market. Do not buy or sell based off of my opinion or anybody else's opinion at that matter. And let's make some money today, guys. Hopefully everybody out there is having a great trading day. I'll catch you guys later on. Peace.